Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good. Billy Ray feeling good, Lewis. Let's take a look at some of these markets this morning. We're going to start out with the Treasury bonds. If you will take a look at the chart that I just posted in the room, the chart that I put in on Treasury bonds, you'll see that we've made the 61% retracement down there at 164.15. You remember when this market started to turn down, we were looking at notes and corresponds to, and of course the bonds break a lot more than notes. I'll post the notes up for you so you'll be able to see the reasoning behind it. We were making a 50% retracement of the high from way back in August. It was an ABCD pattern. We exceeded the previous week's high by 4 ticks and then just rolled right over, and that led to a 3-point drop in the Treasury bonds. And this should be really strong support here in the bonds. Of course, we have the middle-aged crazies are out this morning. They're going to have a jobs report, and of course, they're looking at a tremendous number of 885,000. I don't know what it means. All I know is that's what they're looking. And of course, the S&P has made new highs, and it's been in it's broken out above this trading range that we've been in. I'll bring up and show you what we're looking at here. Just a second here. Got a tiny bit of a technical problem there. I got that taken care of. All right, there you go. You'll see here that we had the big ABCD here down on the 3rd, and now we've gone up and we've hit 44.25. We've taken out those highs, and of course, we're expecting a very, very bullish report. There is one pattern here. I've got a story to tell you, folks, but there's one pattern here that's really, really spot on, and I don't know if it's going to work or not, but it's the kind of pattern that we like, it because you're not necessarily picking a top. You're picking a pattern where you have a risk-reward ratio that is heavily favored in your favor, and that's this NASDAQ. Now, it's tough going into report, but fortunately they have stops in there to protect it. This trade actually has a 20-point lead going into this, so I think the best way to do that, if you were doing that, it would be to put your stop at the break-even point, which would be 15,165. Now, that's not to say that it maybe or may not work. So I don't know if this is going to be a top or it's going to be the top. But let me tell you a little story. My travels across the globe over the past 45 years of traveling and being, in the limelight and stuff, well, whatever the limelight is, has brought me into contact with some really smart people, and none other than a gentleman over in the UK who I highly respect, and we've become very dear friends. He has studied the market more to the extent than I have, I can tell you that, and that's not an easy thing because I've spent my whole life doing it, but he's done it in a different way. He's allowed me to share his chart. I want to bring this up to let you take a look at it. He works on the Fibonacci spirals, and he watches these numbers. If you'll know here, these little yellow dots that are in here, these are the important things to look at. He's been looking for a top to come here in the S&P right around 44, plus or minus 10 points. We're within that ballpark right around now, folks. But the most important thing from my standpoint here is this monthly 6th of August, 2021. He's been waiting for that day, and today's the 6th of August. Now, the reason why it's important, it's a anniversary date. Yeah, this is live, Bo. It's an anniversary date, and basically it's the anniversary of in August 9th of 1982 was one of the most influential days in the financial markets of that decade, almost as important. Well, it was as important as the crash of 87. In August of that year, the Treasury bonds were trading at around 54. They're at 164 now, so you can see what's happened with interest rates, okay? But that was the day that Henry Kaufman, who was the lead economist for Salomon Brothers, came out and said the bonds stopped going down today. And he said that, and just as soon as he said it, the bonds took off and they never looked back. That was the low of the market. It was also a very, very important low in the S&P 500 because we had taken out the old highs in the Dow at 1,100 and change, and we backed off, and we were back near that same level at around 1,100 in the Dow. and bada bing, bada boom, away it went, and they never looked back. So it's an important anniversary date. Whether anniversary dates mean anything or not, I don't know, but we've got a lot of patterns and a lot of things that are telling us that we should pay close attention to up in here. We could easily melt up, big jobs number today. In fact, that's what I'm expecting, is a big melt up. That's what I'm looking at. So we'll keep a close up. Yes, the source of my friend over in the UK, his name is Alazaki, Alazaka. I met him 15 years ago when he came here to Tucson to spend a day with me, and he spent a lot longer than that. And we become very good friends. But he really knows the markets, and he doesn't trade often. He trades maybe 4 or 5 times a year. But when he does, he usually knows what he's doing. But he's been saying that we were going to be going. If you remember last week, folks, we had Jeff Hughes on, and he said we were going to get, substantially above 4,400 in the E-mini S&P, and he's certainly been spot on. But like he said, this is going to be, what you're looking at here is this is not how bull markets start, folks. This is how bull markets end. Howard Marks was on CNBC yesterday, and he called this the mother of all bubbles. Now, I don't know if he's right or not, but Howard Marks is a pretty smart dude. He's been around for a long time. He manages hundreds of billions of dollars, and he's saying to be careful. That's what I'm saying to people, is just, sort of be careful. That's the whole key, to carry away this. But, whatever the Fed has been doing, they'll continuing doing until they don't do it anymore. So that's it. But these job reports are really a joke, folks. And the reason why, I have to finish the rest of this story. The reason why is they changed the numbers. If you go back and look at the previous number, they changed the darn thing, but usually by several 100,000. It was that day in August of 1982. I was on the floor of the exchange, and I happened to be with Leo Malamed, who basically started the CME financial section, and Byron Tucker worked for him for Delshire Commodities, and Leo came down and gave him an order to buy the S&P, and Byron said, but there's going to be a report out, and it could be bullish or it could be bearish. And he said, this market's going higher. It doesn't make any difference what the report says. This market's going higher. And that's what he said. And he said, he said to him, don't forget that, young man. When it's time for it to go, it's going to go. And that's what happened that day. And it was August the 9th of 1982. And that was a big 3-drive to a bottom pattern in the S&P 500. And it never looked back. And it's still going up, and it's going up today as we speak. Anyway, someone asked a question a little bit earlier on my show yesterday. I talked about John Hill's Yum Yum trade. If you're interested in that, just go look at John Hill's. He's got several books out there, and he mentions the Yum Yum trade. I have it in my file somewhere, but where it is, is anybody's guess, and that's neither here nor there. So we're going to be watching it, what we're watching here, close here. Mr. Z is just talking about some of the people that are looking at cycles and may or may not happen or not. We're going to take a little break here, folks. 877-927-6648, and we'll answer any questions that you might have this morning. This is being recorded from my regular show that will be on at noontime.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I put up a chart of the crude oil. This was our trade of the week last week, and of course, it happened to be one of the ones that worked. We went down from 74.20 all the way down to below 68, and we're trading at around 69 right now. But these patterns don't always work, but when they do, they work quite well. The key to this is how much you have to risk. When you do trading, it's not how much money you make, it's how much money you don't lose. You got to think reverse of what most people do. Think like Las Vegas does. You know, Las Vegas knows they have the big edge, right? So they want to see a big winner every once in a while. That's why they flash all these flashing machines with sevens and circles and money falling out of it and everything like that, and showing you what you can make. But nowhere in those slot machines does it say you cannot beat me long term. And not only that, but it says that I've taken in $1.2 million more than I've given out, even though I give out 95% of the money that I take in. But the key here is when you're trading, you have to determine what you're risking, and that's what we're looking at on these trades that we're looking at on the NASDAQ, and then also in the crude oil. Crude oil happened to work, and we covered the short around 69, so a little above 69, so it's okay. Okay, the question is, would you explain the graph that I put up there, folks? Allah first of all, he is from Iraq. His father owned the Coca-Cola distributorships in Iraq for well over 50 years. But when the Shah of Iran came in and they had the big uprising in 1979, they basically were told to get out of the country. They were able to take 5% of their wealth. The rest of it they had to leave. He has a brother, 2 brothers and a sister, and his mother, and they live in two live in London, 2 live in Lebanon, and they've all been very, very successful in other areas that they've been in. But he's just he's really a stand-up guy. I mean, he's just my wife and I enjoy being with him, and he's very, very funny, and he's very, very smart. But those spirals are Fibonacci spirals. He's done a program that gives him an idea, but he doesn't trade very often. I mean, he like I say, he only trades 4 or 5 times a year, and he primarily only trades the S&P 500. But he does gold, and he does treasury bonds occasionally. But he's a pretty sharp dude. Anyway, let's move on here. Take take care of business here a little bit. I talked to you about the crude oil. Now we're going to have a situation coming up here pretty soon. Hold on one second here. Boy. And it's coming up closely here, folks. We're getting very, very close to it, as a matter of fact. Let me get this up here. This is the chart that we've been waiting for. We might even be there right now. I think we pretty closely might be. We've been waiting to see this area of 180, 118 in the euro. I haven't been able to see what the euro is doing this morning. If you'll give me a second, I will check the old thing and see what we're looking at here. Hold on one second. Where are we? Yeah, by golly, we hit that son of a gun. Shut the front door and raise the rent. I'll be darned. We're down there right now. Yep, there we are. Shut the front. Let's put this up here so we can update it. Wow, I got lucky on one. Yeah, here we are. We're there. We're down. This is the futures now, folks. So it's a little different. It's a little different in the futures, but we're there. That euro in the 181, and we've just hit that. So let's remind ourselves this might be a good. And here we are with the jobs report. Usually that's where they do it. The big one here, folks, is not the S&P and it's not the Nasdaq. It's the bond market. That's where the players are. The bond market is many, many times bigger than the stock market, and especially the futures. You know, we have an open interest of something like 4 million in the bonds, or 6 million in the notes. And it's 2 million in the S&P, and that's the larger one. The Dow has virtually nothing. Russell is number 2, Nasdaq is number 3, and the Dow is number 4. So that's where they get all the speculators and stuff. But the real money is out there in the bond market. That's where they're playing. We got 8 minutes to go till they pull that lever on the cash machine, but we just hit that number. In the euro, so pay close attention to that. As a matter of fact, it's so close that my beeper it just went off just now, so it's right on. I can't make this stuff up. Okay, let's move on here to just another one. A couple other things that look interesting here, and that is the fact that we have a situation in one of our favorite trading things here at Trade What You See, and that is in the natural gas. And I want to get this up here because we've been showing this now for the last several days, and we've been up here for the last 2 weeks. We've been setting exactly at the 420 level. We hit the 420 2 days in a row. We're now trading around 411. That tells us that we're probably pretty close to a pretty good top in natural gas. So you want to put that on your watch list if you're looking at it, because it's got a very low risk and a high probability trade coming to it if it's going to be correct. So that's what we're looking at. See, that's 118 on the last in the euro. That's right, Mr. Z. I just saw the beeper go off. So, and I hate to go into a report, but when the numbers are there, I have to do it. So I put an order in. I put a 30 pip stop on it, and pray to the trading gods that when they ran it up, we'll have to see what happens. We're going to be they've really built in a yes. Well, no, it's only been 2 days. Yes, I've been watching it for the last 2 days at the 420 level. Yes, that's exact. Well, I've been doing it on the show. Those of you that follow my show, at noon every day, noon to 1. I mean, I've talked about it every day. I mean, it's gone to that same level several times, and it's all I'm looking. Here's again. You're looking at a slot machine and say, okay, is this thing going to work or is this thing not going to work? I don't know if it's going to work or not. All I know is that my payoff is going to be bigger than my loss. That's all. I understand, Mr. Z. I understand. Okay, let's move on to. We've got 6 more minutes till the middle-aged crazies get in, and we'll be able to see it. And This is most probably going to be one of the most important jobs reports. My guess is they built in some big numbers in this puppy here, so they're probably getting ready to jam this thing up into the 440 level, 4444 in the E-mini S&P. So we will see whether they surprise people on the other side or not. I don't know, but it's just been universal on the TV early this morning when I got up to check to see if there's any news in the world worth talking about. And of course, that's what they're talking about, is this bullish report that they're getting ready to look at. So we'll remind ourselves of that. We'll see what's going on from that letter. Okay, we've got another minute or so to go to the break. Give me 1 second here. I did want to cover the chart of the hood. We've been watching that on our program just to get an idea to show you how these numbers work. Here's where hood opened. You see, once it took out the high of the opening range, we went all the way up to 86. We came down. We stopped exactly at the 50% retracement. We went up and missed the 61% retracement by 30 cents, and that led us with a possible ABCD format here in the hood, and that'll bring us to around 46, and we've been as low as 52 or 50. I think we've been right around 50 is low. I think it's 56 was the last trade I saw just a little while ago, so we're really close. 46 is the big ABCD down from this level. This is very highly speculative, folks, and remember, these are the guys that have their baseball caps turned backwards. We'll be right back. 877-927-6648.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den trading room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Okay, we're back, folks. Did the slot machine pull the lever or not? What was the number? Good, bad, indifferent, whatever, who knows? See, the bonds went right back down to the 61% retracement again. Pay attention to that one, folks. That's really important, that 164.20 level. We're at 164.22 right now. The S&P's made a little bit lower low, and then it's gone, still not doing too much. So the report must not have been bonkers, whatever it was. What was the number they were looking for? They were looking for 885, and I just was curious what what the number might have been here that you folks might have been looking for. That I don't know. 943 actual. Is that a good number? I don't even know. Good, bad, indifferent. But that's better than normal, so that's a good sign. That's a good sign. All right, let's move on here to a couple other things. Did the euro react very much, folks? Here we go. We got the S&P moving up a little bit now, up to 44.27. My guess was 44.24 is what I'd be looking for on this to see if it's going to get to that number or not. Let me double check to see how much the old NASDAQ has moved, because, wow, the NASDAQ went all the way down to 51.20 and now it's 51.43. Boy, that's a big difference between what's happening in the NASDAQ and what's happening in the S&P, but that's neither here nor there. Okay, let's move on here. Can someone please give me, I can get it, just one second. Give me a second here to see where we are with this. I can tell you right now. I got a little bit of a technical problem, boys and girls, so here's what we're doing here. Shut the front door and raise the rent. I can't find my my charts. What happened to me? Wow, this is not a good sign. Not good. All right, let me look here for just a second here. What happened to my euro? Boy, I'm sorry, folks, but I get a little flustered when the technical stuff doesn't work out the way that it should. But let me move up here. I want to double check to see. I'll ask it. Can someone tell me the last and the low on the euro, please? I just like to know what it's doing, because I don't have access to it, and I would like to take a look at what's going on. So evidently no one's watching the euro, so I won't worry too much about it. The gold market, I believe we've got a chance here. We're trying to take a look at, we're buying the gold down around that. Oh boy, we came really close. Holy cow, this is a very interesting one here. Let's get 1 second. I'm trying to do two things at once, folks, and it's not an easy task. Hold on. Let's get up here. I want to show you why we're looking at the gold, because I think it's got some potential here if we can get the right chart up, and that's what we're looking for here. There we go. Here's what we're watching here in the gold. We're not very far away. We're only about $8 away here. We've been waiting for this number, 1782, and the thing we're trading around 1790 right now. So we're very, very close to that number down there at the 1782, 1783. You got to risk about below 1775 as your risk if you get there. But that's what our game plan is to try to buy the gold down in that area. We've been waiting for it for 11.5. Okay, so the euro went below it. Okay, the low was the number was at 118.01. And so it's 117.98, so it's right in the ballpark. There would have been a 30 pip stop on that. So you put your stop at 117.70 if you did the euro, because you don't want to risk more than 30 pips on that. Of course, there's going to be a lot of emotionalism on these markets. There's no question about it. They're going to be jumping around quite a bit. Hold on just a sec. I wish you could see the there we go. We just hit 1790 in the gold, so we're getting very, very close, and we'll see what happens with this after we get moving here a little bit. So far on the S&P, we've had a high of 29, and we're trading at 27 right now, and our low has been 19. So it's in that ballpark where, and the NASDAQ, of course, is lagging quite badly. It's trading at 51.33, much closer to the lows than it is the highs, but that's because it's been the leader all the way, and that's the one that completed the pattern that we talked about when we were looking up here. The TLT is this was a big deal, folks, in this TLT. This is the Treasury note. I'm going to get this up here because it was really important. We focused on that this whole week for the fact that, this is just 2 days old now, but we went up and we made that exact 50% retracement, folks, 135.14. That took out the high the previous week by 6 ticks. The bonds did not take that high out. The bonds had a 64.05 print, and we had a 64.01 print the next week, and then the bonds broke 4 points. So that's market feedback. When you see that that's very, very important of what we're watching here. So let's keep our eye on the ball here and see what's going to happen for the rest of the day here today. If you have any questions, it's 877-927-6648. Folks, for the past 5 years, I've been asking my friend over in the UK to post one of these charts. And for the first time today, he said, yes, if you want to post this one, post it, because he wanted you to see the importance of this day of August the 6th and this number that he's looking at. The number he was watching for, of course, was 44 plus or minus 10 points. So 44.34 would be the low end, and 44.54 would be the high end. So far, we've been to 44.30. That's close. Whether it's close enough or not for hand grenades or tiddlywinks, I'm not sure. But the dude's pretty smart, so let's pay close attention to it. It is a big anniversary date because I mentioned back in '82 that was the bond market top, and the bond market bottom, and they never look back. Okay, let's move on here to 44.44 is a lucky number. You're absolutely right. If you like 44.44s. The other thing that's been happening in the market that's not reported very much, our friend Stan Harley of the Harley Stock Market Letter has certainly been talking about it, and that is the fact that you'll notice here, this is the advanced. Let me make the chart bigger. I'm sorry, folks. I should have made it a lot bigger. Get it up here, and we'll be able to see it. Well, you'll notice here that we've had this big rolling top here in the advanced decline line. Like, we've made new highs, of course, in New York Stock Exchange Index, but the advanced decline line, even during this run-up, has been rolling over. So there's a lot of stocks that are declining, and they're not, going up. So there's a few that are doing that anyway. So that's the main thing of what we're paying attention to in here today. So we got a lot of big things happening. Whether they're going to continue or not, will have to remain to be seen. I will bring up this one other chart here that someone asked a question about that I think will be relatively important, and that is related to this dollar index. You'll see here, this is where we are here with the dollar index. Now, the market, this dollar index rallied off of this week, folks. We rallied up to about the 92 and change level, and this should be an area of topping in the dollar index and bottoming in the euro. So that's it. Ruby's reporting that non-farm payrolls was 943 versus 870 as an estimate. So it was in the ballpark. It was good, and that was expected. I was expecting something like 1.7 million or something like that. So that's it. Oh, now she's got it broken down. Well, the one thing about statistics, folks, they can be changed. We'll be watching these as we move through and look at some of these others. Another one, folks, from a long-term perspective, I don't know if it's going to happen or not, but this is one that you really need to pay very, very close attention to from a long-term basis, and that is the silver. This has an incredible pattern up here. We made this 30-cent level, and now we're down below 25. We'll be right back. 877-927-6648.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I want to put up the chart of the silver. You recall on the 4th, just a few days ago, we made the 786 retracement to the exact high. We're now $1.50 lower. I still believe we got a chance at $22 silver here, and whether we're going to stop on the gold. Gold, if you're doing the gold and you buy it at that 83 level, you only have to risk about $4. Because if it goes below that, you certainly don't want it. But if we've been short, so this is where we're covering. So I would say that this is the object. Not everybody's short, but I'm saying this is what we said. The market's heading down. I can't hold everybody's hand all the time, but we try to give a pretty good idea of what's happening. But we're below the 78% level now in the S&P or the silver here, which means we are still going down. And the gold is, hold on one second. Do we just hit the 83 level in the gold, folks? I think we hit it just spot on, didn't we? The low was 82, so you don't have to risk too much there. You risk about $4 at the most, I would think. So you definitely, this is where I would be out of the short positions here. If you're interested in going long, that would be, you got to put a stop in because, these things, once they start, they can go down a whole lot more. And you don't want to stand in front of that if we get it. Now the S&P is now backed off a little bit. We're closer near the older end of the opening range. The interesting one is the NASDAQ. If you notice how it's falling, another one here that is really just giving up the ghost here that we talked about, and that is the Treasury bonds. You want to get up here because we shattered that 61% retracement level here. These bonds are so bearish, folks. I mean, it really is a they're just extremely bearish. Let me get this chart up so you can take a look at it here. And there we're working at right now. Yeah, if you're going to do that, if you did the gold, you got to risk about $5. So 83.78 would be your stop. But frankly, that was a time to take out your get out of your short positions here. If you're looking at it, it's been very bearish, folks, especially in silver. You can just look at that silver chart, and it shows you how bearish it's been since August 4th. That's only 2 days ago. We dropped $1.50 in 2 days. I mean, that's when it stops at those numbers. I mean, we believe in those numbers, and when they work, you gotta give it a little bit of a heads up. Now, the only thing that we have going now in the bonds is if they don't hold a 164 level, that's 15 points from where we are right now. That's the 78% level. That would be it. Let me do the daily here, and you'll see why these things, why it was so bearish on the daily chart. You'll be able to get it here. Because this was our just a second. It takes me a little bit of time here to get this up. Hold on one second and move this up here. Yeah, I think they are heading down lower, Mr. Bo. You got that right, brother. Okay, anyway, that's what we're looking at. We hit the 786 yesterday, on the 2nd, and we've been down hard ever since, and it looks like we are breaking down more today. The main thing, see, what I did this morning was I put an order in to buy the bonds, and I did. I bought them right at the 61% retracement, and they rallied 20 points. Well, if I've got a 20-point tick, $600 profit in bonds, you think I'm going to let that thing go to a loss? Absolutely not. So what I did was, the report coming out, it could have gone the other way, but I put my stop back at break even, so when it went down and hit that number again, I'm out. I don't have to worry about anything. I'm breaking even, didn't lose. And that's my whole thing, is not to lose very much. That's the whole key. It's not how much money you make, boys and girls. It's how much money you don't lose. And therein lies the key to what we're looking at here. So let's keep that in mind as we look through this the other day. All right. Let's just move on here. 1 second here. I've got to double check this a little bit more here. Okay, how low did we get here in the bonds? Or in the gold? Did we get to that? We got to 79. So I said 78. If you put your stop in, you're going to get filled right now because it's already at 78. If you bought that, you would be out of it with your $5 loss. But frankly, we think this market is still going to go a lot lower, but that should have been good support. But in fact, it wasn't. So we'll just move on to the next one because we have to wait and see. Well, most probably where it's going now, if you look at this, most probably it's going to go down to the 78% level. That will take it here to 1772. I said 82, and this is 72. Yeah, here it is right here. Let's get this up so you can take a look at it here. This would be the there it is right here, and you'll see there's the number we were looking at right in that area. So that's about it. Okay, if you have any questions, 877-927-6648. This will be replayed on the regular show that I do at noon to 1 every day, and we'll be back again on Monday. And I believe we have Tim Bost will be our guest. He's been talking about these markets going straight up, just like Jeff Hughes is. So he'll be chatting with us again. So we'll do that. I will not be here on Wednesday and Thursday of next week, folks. I have something that I need to do, but I will be on Tuesday and Friday, Monday, Tuesday, and Friday, as for the regular show. So we have, someone's asking a question about, I don't know why anybody wants to know about hogs, but hogs, we had a situation in hogs that was very interesting because they went limit down yesterday. I don't know where they're going to open yet today, but give me a second here and we will take a quick look at it because here is what we're watching. And as you can see here, we were limit down yesterday. They didn't trade for the last several hours. And you'll notice the high that we made here. Let me get the chart up first so we can all see this together. Yeah, it was due to the rolling contract. Yes, I'm certainly aware of that. But here, just 1 second here. That's the shut the front door. I did a no there. Sorry about that. All right, there's the hogs. We went up to 61% retracement at 91. Boom. Gap down yesterday, limit down. That means the ABCD on this is going to take it down to about 83 or lower. So that's it. We had a 3 drive to a top up there. So it was lined up exactly the way that it should have. But in fact, that's neither here nor there. And we'll see how that moves on from this level right here. So that's what we're paying attention to this morning. And no other questions that we had. Let's see. I want to double check a few of these things because I'm really interested in the euro, folks, because that euro that's real money moving, and I want to watch that because it moves around quite a bit when it does. And let's just change this a little bit. Tile vertical. Come over here and see where we are with the old euro. And I've lost the euro. Boy, I've got so many charts up here. I don't know which is which anymore. I've got too many, and some of them are the wrong ones, but I'll get them straight. This is why I don't do an early morning show, folks, because it's just too doggone crazy. So let's move. We're still breaking hard in the silver. We just broke 24.70. We're down to 24.65 right now. That means that the gold is going to be going sharply lower yet. And that's neither here nor there. Let me double check the euro and then we'll have a question or two when we have the break coming up. Hold on one second here. And we'll be right back with you after a break coming up, I believe. I don't hear the music yet, but it should be coming in very, very shortly. And then we'll have a pretty good idea of what we're looking at. This euro's not going to be working, folks, because it's going through it like melted butter, and that is not a good sign.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we started the show with this NASDAQ up there at the 151.61 level, and we've broken way below the 151 level. We got down to 150 and change. So that's been a pretty big break so far this morning, and that's been the leader. Whether that means anything or not, we have to wait and see. But the report is out. It was bullish, but that, just the market follows the trend, folks, and the market's been up. So just pay attention. There's a lot of numbers coming in up here. Whether it means anything or not will have to remain to be seen. We'll just look at these one at a time. Remember, the adage here is it's not how much money you make, it's how much money you don't lose. And I love David White's comment here. Sell when you want to, and sell when you want to, and not when you have to. I love that quote, and that's exactly right. You got to buy them when they're crying and sell them when they're yelling. It's the main thing. Okay. The other question that someone's asked me, and that's about copper. Copper has been actually lagging the market by quite a bit, and we've been talking about that for a long time here. And I'll bring it up here so you can take a quick look at it, because we've had a situation here where last week, the copper was trading. We got all the way down, folks, to the 428, 430 level the other day. We did rally back up to 439, but you can see here on this 4-hour chart that we made the 61% retracement up there at that 460 level. This is still kind of bearish too. So that's about it. Live every day in an attitude of gratitude, and may God bless. And please do something nice for your neighbors, because they need all the help they can get.